Since the markets have not performed exceptionally this year, most investors are not in a great space right now. So, how should they approach the rest of 2025?
So, like I mentioned to you, Neha, of course, the good part is that the market has gone through both price correction and time correction in this one full year. The peak was, of course, around 26,000 last year, and this year we've almost seen a 22,000 level, and now we are back to about 25,000 levels. So if you see, a 1 year has passed by, and we almost come back to the similar levels. I
Hmm.
would say that, like I said, it's an opportunity. Why I'm saying this, that if you look at equity, you have
Hmm.
to look at it from perspective of in how much time. So, whether it's the long term, medium term, or short term. So when I look at the long term, it's specifically driven by macros. And when you look at
Hmm.
Indian macros per se, I think most of the macros are in our favor. Whether you look at GDP, which was the last quarter 7.8%, and expected to end the year at about 6.5%, and which most people are still maintaining despite the slowdown. So six and a half
Hmm.
percent, we are the largest, the fastest growing economy, large economy. Whether you look at inflation, which is again at the lowest at about 2.1% in August. If you look at interest rates, we have already cut 100 bips, so we are at the lowest interest rates. So when bond yields are low, again, equity valuations go up. Of course, earnings, there was a little bit of issue because of the overall uncertainty, but we expect a lot of back-ended demand coming in, specifically on the back of this GST cuts, which the government has done, on
Hmm.
the income tax cuts, and also they are increasing their expenditure in the economy. So all of that is a multiply effect on the economy and the demand. And so from a long-term 3 to 5 year perspective, I don't see an issue.
Okay.
Till the time this global uncertainty will stay, of course, markets will not give some kind of direction.
Hmm.
But at the end of the day, underlying fundamentals stay strong. Like I said, in the medium term, it's the earnings, so we have to wait and watch. But our sense is that our earnings are likely to come back. And also, if you look at the valuations, are pretty fair currently at a reasonable 20 times 1 year forward P. If you look at the market, ideally
Hmm.
should be around 25,000 levels, which is where. And if I look at
Okay.
1 year forward P, then from that perspective, we are expecting the market to be around 26 and a half, 27,000 by the end of the year. So that's a good 10,
Hmm.
11% possibility of a return. And of course, short term, nobody can predict. So we would not be able to say, but of course, liquidity would be one thing that you have to look in the short term. There also, when we have
Hmm.
seen from liquidity perspective, whether it's retail, which is the SIP, it's continuing its momentum. 28,000 crores of SIP is coming last year as last month as well. Previous month also it was in the similar range. So the retail has become matured and they have continued to give the liquidity. So the domestic liquidity is strong. FIIs, of
Yeah.
course, have been selling. We have seen that. But if you look at
Hmm.
the derivative market, if I look at the first week of September, we look at something called as a long short ratio. And the derivative market,
Hmm.
the FIIs were sitting 92% short and 8% long. But if you look at yesterday's number, then we are talking about almost 84% long. So that means they have removed the shorts, which is some kind of
Hmm.
indication, short-term indicator that they are kind of reversing their trends. So all of
Yeah.
that makes me believe that I think it's a fantastic opportunity, if you ask me, if you have a 5 year horizon for sure.
All right.